Welcome back, technical traders. This is the Humble Chartist, and today I'll be doing a technical breakdown on Facebook, or also known as Meta platforms, ticker symbol FB. Before we begin, please take a second to give the video a like and subscribe for more charting and price manipulations. I deeply appreciate those who have liked and subscribed to my videos and channel. I'll first start off by analyzing the daily charts, followed by the weekly charts and monthly if necessary. So recently, because of Facebook announced lower expected earnings, and that's why it had such a big fall. But if you will ask me whether I'm surprised, question is usually I'm not really surprised. So how do we actually predict earnings? You see that if the stock has been uptrending for a very long period of time, but suddenly before earnings, a few months before earnings, we see a sell-off or pullback that is larger than expected. You can see that we did pull back. This high here turn the resistance here, managed to turn support. So there was some selling beforehand, and we also actually broke this previous support on the way down. So it's an indication of sellers already selling. So usually, if the stock is pretty bearish before the earnings itself, that means insiders and the big players already have got the information that the earnings will not be good. Hence, they already sell beforehand. And then the big drop will come when the earnings come. Hence, we saw the very big 20 to 25% decline. So if you ask me, where are my potential supports be? Originally, I thought 231 would there will be some bounce at 231 because it's a relatively strong support. But then again, because we gap down and we hit about 238, and that is too close for comfort to 231. So I did expect more pressure coming down. So at 231, we did see some buyers coming back at this level here. There was just a slight bounce. The thing about downtrending stocks is that it will definitely have bounce along the way, but there is no potential reversal until the big players come back. So you can see that when downtrending, and then we had bounces. So likewise at 231, we did see a bounce. Then the question would be, where would the next supports be? Well, the next supports that I'm watching at is actually at 210. 210 is one of the supports that I'm watching at. After 210, it will be the psychological support at 200, which in the event that we go there, I believe that we will break 200 psychological support. And a deeper, very deep correction may send it to about 184, 185. But this is extremely bearish, extremely oversold, and extremely overcorrected. But I do have my reasons. If you were to look at the daily MACD, the daily MACD tells us about the momentum and also the trend. You can see that we already have crossed down way below it, which is not a good indication. You can see the stock was pretty bullish at this point in time, but that was also where the big players actually distributed. If you were to zoom out a little, just take a look at the zoom in out, you can see that at the previous correction here, we went all the way down from the peak all the way to the bottom here. Likewise, it seems like now we are also all the way down. And in fact, we form a lower low. You can see that this low here and this low here, this low is a lot lower than the previous correction in somewhere in March 2020 during the major sell-off. So it seems like this time it is a much heavier selling, and it's better not to rush in so quickly. And the truth is that when the stock gaps down 20 to 25% is an indication that big players have really sold off. And that being said, a lot of retail investors actually rush in at 231, thinking that it has bottomed or even coming in when it immediately gapped down about 240, 238, they came in already. That's where the retail investors come in and get stuck. That's where the big players continue to push it down. Personally, I actually drew this trend line is if you look at the weekly charts, the trend line is an indication that we are still on an uptrend. But definitely, if you look at the weekly MACD, the weekly MACD tells us three things. During this crash, the MACD was at this bottom here. This correction, we are also at this bottom here. And now we may be looking at some potential supports here. But the MACD has still yet to turn up. So if the weekly MACD has yet to turn up, then we can expect more downside. If you look at the RSI, the risk, whether it's overbought or oversold, in fact, FB now is oversold territory. The good thing is that every time we went to this oversold territory, we did have a bounce. So if you were to buy in maybe in the upcoming days or weeks, and RSI continues to go further, you can't be wrong as compared to buying when the RSIs are here. But then again, it's always important to wait for the big players to accumulate even before buying, because if they do not return, the only direction for the stock is to go down. So even if this yellow trend line is drawn here, it doesn't mean that we will bounce above it. In all honesty, look at this. This is where we actually broke the lower trend line, which is what I'm seeing from this. If we do break this trend line, that's where people will stop loss and they'll cut their positions. But in the event that not many people cut their losses and they are still very reluctant to sell, then the market makers may push down to this level 200, price 200. And that's where the tricky situation is. If we were to go to $200 and then we break it, but intraday we manage to close above it, perhaps maybe we go to 196 or 198, around those levels, but we manage to close above it with very healthy green candle and also lots of volume. That's where we may see some potential reversal, because many people will be putting their stop losses perhaps between 192 to about 198. So please do not put your stop losses at about 190 zone, because these market makers may flush it out. That being said, doesn't mean that we will reverse at 190, because at 185 there is another crucial support. But overall, I believe that we will be forming higher highs. So at higher highs, meaning that we will potentially form some support here, and we should not break this support, which is very crucial. If you look at the monthly chart, the monthly chart tells us that we are in fact very, very bearish. You can see that it has never been the case that the monthly MACD has became bearish. So you can see that the blue line has always remained above the orange line. So when we had this correction here and we had this correction here, we cut back above immediately, almost immediately. But for now, the thing is that the blue line has already cut the orange line from above. So it's an indication that the big players have already sold off. It's very dangerous until you see some white candles forming like this histogram here. You can see that from red, it became to white. So if red becomes white, then potentially we may see a potential reversal. RSI is also very low on the monthly scale, but it can always go lower. I would like to share one of the quotes by one of these legendary traders, which is Jesse Livermore. He said, "Never buy a stock because it has had a big decline from its previous high." I believe that many people are in Facebook, be your cost price, whether is it too high or too low. I wouldn't really want to know, but the stock having a big decline from the previous high here is an indication that the big players have already left. So when would the big players come back? They would only potentially come back if they feel that the stock still has potential, and if less retail are on board, meaning retail investors have already cut their positions away. We can take a look at the Fibonacci to have a better understanding of where we stand now. If you were to look from the Fibonacci from the high all the way to the low, you can see that we didn't hold this. We are currently at about 221, which is this 38.2% support. So we may potentially see a small bounce here and there. Then the next support will be a 183, which is about 184, 185 target. That being said, if we look at the clouds, we are still far away from the clouds. The clouds acts as a support when we are coming down. So you can see that supported here by the cloud, and then we see buyers coming back the cloud. So in the upcoming months or weeks, we may see some support at this particular level of cloud. That's where we may see a potential reversal. Hopefully the buyers come back, and hopefully we can see more green candles appearing with huge volumes. Okay, that's all I have for this video, and hope that those people who are stuck in this particular stock try not to average down, try not to buy in without any confirmation of buyers returning back. And also, please do not put your stop losses if you're a long-term investor, because as a long-term investor, if you put your stop losses, if it gets triggered, chances of it going higher is very high. This is simply because of market manipulation. The market makers are actually watching every move that you make. So if there's anything else, I'll give you guys an update. Thank you for stopping by, and do check out the rest of the channel. Leave in the comment section below on your thoughts on this particular stock if you have any other TA requests. Also, do share this with your friends who are interested in market manipulation. Lastly, I do appreciate any feedback to improve the video content for you guys. Till we meet again, appreciate the manipulation.